Hello, everybody. How we doing tonight? We talked pretty recently. Had a few issues along the way. Wi-Fi cut for 30 minutes about, but at that point I wasn't gonna come on for the last 15 minutes of the market. Also, recording is not didn't work pretty much. It cut off and the file was lost. So there will be no YouTube recording about the one loss we took, right? Well, I took. I don't know who was there today, but did a little bit of live trading. We're gonna do more tomorrow, so make sure to not miss that, right? I don't do them often. I want to make sure I keep not doing them often because that is something that is kept mainly for the students. Squirrels ate some wires. Did you really check, or was that a joke? Because it might be the whole fucking my whole city actually just cut off power for 30 minutes and didn't say shit. Yeah. All right. I would be willing to accept any fucking explanation at this point. But enough talking about that. We can get right into price, right? And we expanded higher, right? Bullish conditions. We're going to expand through highs. And more specifically, we just ran aggressively higher, right? That's what happened today. If we look at our 4 hour, sorry, I was going to say our 10 a.m. power of three, we didn't do much this morning. We did have an opportunity for a run off of that CPI, which we'll look into. And then PM, as you can see from the divergence here, was a very bullish PM for NASDAQ, and same for ES, but ES retraced way more aggressively to the downside. I want to start us on a 15-minute chart to look at the daily power of three. So this is our candle. We had two high impact news events today. So we had CPI at 8:30, and then we had FOMC with its two-step delivery at 2 p.m. and 2:30 p.m. As I explained pre-week, right, when I was speaking about the high probability trading days, I specified that even though you're not supposed to trade before FOMC, I am willing to take a trade with CPI in the morning because that injection of volatility is enough to grant a trade. So I was willing to take a trade in the morning and then make sure it is closed far before FOMC and then take a trade on FOMC as well. As you can see, we closed the day with very high, very aggressive, if I can say it like that, SMT on the highs. And we also had, let me just mark it out correctly. I believe it is this one point. We also had SMT on the lows along the way. I don't know if we can see it too well on a 15. Yeah, we can. So we had a bunch of SMT in this zone and a little bit on a 15, but I'm not going to spend my time worrying about that. Why? Well, very specific. When you have SMT on both sides, you're trading consolidation, right? This was consolidating, and we were waiting for a raid coming with the NFP, with the FOMC, sorry, not NFP, which we'll look at in a 1 minute chart anyways. So the real thing I wanted us to focus on was this 15-minute gap, which I am going to include the volume imbalance in and mark out the quarters, and the fact that we did not trade into this one. We did have a volume imbalance here as well, so I'll combine it. We did not trade into it in the morning on ES, but did in the afternoon. What is the simple truth that we can find out? Well, NASDAQ was weaker in the morning, expanded higher, and then they flipped. ES became weaker while it was stronger in the morning. One thing to always notice is that when you have large wicks, right, just in any time frame, anytime, I have a very specific fib setup for it, and it's very simple. I'm just looking at CE. Consequent encroachment is always what I'm looking at. And I like to utilize this as a premium and discount. And yes, I'm referring to this specifically while NASDAQ is weaker at this level and retraces back into the fair value gap. ES is stronger and is respecting consequent encroachment of this. So I'm actually going to remove the fair value gap and just mark it out using lines so it's easier to see on our lower time frame. Diving into it, and just to talk a little bit actually about our intraday draws on liquidity, you did have a London framework, but you need to understand that some things will trump them, will trump these frameworks, right? How do you filter on what is going to be, what has a higher probability of working as a London framework, sorry, and what has a lower probability of working? Well, on a day like CPI often runs on side. And when I say often, I mean about 75% of the time, if not more. I should actually get the real data. I just don't have it in my mind at the moment. So that is definitely something that I was looking at this morning. There was also SMT. Here, I'll mark it out. SMT on the lows that were formed during London. So right here, I believe it took it out, if I'm not mistaken. I need to go back here. Let's go to a 15-minute chart and look at London lows today. Because anytime we're looking at a daily high and a daily low, you want to create some candidates, right? You want to form some ideas along the way that would tell you, well, this has a high probability of becoming the high or the low of the day. I remembered seeing SMT. It is here, but apparently it broke it. So I'm going to look very quickly if there is more SMT. There is divergence here on the lower time frame, so probably a 5-minute chart right here. There would be divergence in the swing points. But there was SMT along the way, just not a clear turning point up until CPI. So if we look right here, that is the main SMT that formed this at the CPI news injection, a volatility injection, sorry. And if we go on the 1-minute chart and we look at CPI right here. So we went higher and we went lower on ES, telling you that NASDAQ was stronger, even though at this level it became weaker. It was stronger. You would be looking for longs on NASDAQ. Taking that idea into account, we have 8:30 news. Some people might want to trade the 850 to 910 macro. Personally, I very rarely trade it. It is in pretty specific conditions, but you got to understand that oftentimes this macro will be used to consolidate to then form the move at the New York Open. So see it as AMD, right? Everything is a cycle of power of three. See it as accumulation, manipulation, and distribution. In this specific case, we had manipulation into our 15-minute fair value gap, which we previously marked out. I am going to make this smaller so that we can also focus on the big thing that happened here. Let me just adjust them a little bit. There we go. SMT, right? You're always looking for SMT at key times, if I can say it like that. So we understand that 9:30 or 8:30 news is a key time. So if you see SMT at these times, you can take a deeper understanding off of that than if you were to see any SMT at any point in time. As we can see, that is our large 15-minute wick, which lines up as a 1-minute wick as well. We have SMT at these lows. This is a great indication that we are done retracing on NASDAQ, on ES as well, right? Because if we look at our most recent expansion range, or just a complete range following the expansion from this fair value gap, we did retrace to a discount. We retraced all the way down to a discount before continuing higher while forming SMT on NQ. For all you turtle soup players, that's your entry right there. I actually tried turtle souping this morning, but my account wasn't connected, so I ended up entering on this candle for my first position. I believe I shared my executions in general. I'd have to check right after, but I believe it is. Following this SMT, which is clear confluence that this is a low that will form an expansion, and then which kind of objectives do you have? Well, you have a clear level right here, levels that are too equal, too clean, as ICT likes to call them. That is a definite objective, but more specifically, you have your data highs right above here. I am going to remove this wick. You have your data highs right here, which were a great low-hanging fruit objective, and we had a clear unicorn right here. Where is your breaker? Well, the first breaker that was formed was right here with a market structure shift above this high. It is a very tight one, might not be the first one you noticed, but it is to me. And as you can see, we also retested the swing high beautifully. That's always nice to see. When you have a large range like this, you can oftentimes refer to the 5-minute breaker instead, because yes, that also forms a 5-minute breaker block. And I usually prefer using that when it's been so long. So it's not a question of the size of the range, more so than how long it's spent. So when I want to see less candles and have a clearer breaker, I'm going to utilize a higher time frame, more specifically the 5 minute. Never the 15 because that is too far. That is intraday movement for me, and I'm not looking for entries there. Personally, with this breaker, I decided not to enter on this fair value gap because we had a volume imbalance right here, and also this inverted fair value gap with time distortion through it. I don't mind about that. And that is something we can probably visit at another point in time. But what happened during this time doesn't matter to me. From 9:20 to 9:30, I don't care what happens there. I'm waiting for 9:30 to give me my confirmation. So even if it traded through it, I know that it's in accumulation phase, so I'm not scared of what is going to do. Could have also used the Reaper right here if you guys are familiar with said PD array, but just in general, you had this inverted fair value gap that I like to use for an entry. Just for the sake of it, I'm going to use the top one because that is the easy one to spot. If you're entering here, you have one PD array here. Let's just say you don't see this inverted fair value gap because to you that is invalidating said idea. Well, you also have a fair value gap below and an inverted fair value gap to the left. So placing your stop at the low of this candle of the fair value gap gives you your 3 PD array stop loss rule. So 1, 2, and 3. With this entry, as I said, I had a better lower entry, but this is the entry that can be easily justifiable. But then to your low hanging fruit, that is 1.45R. So that is not a good low hanging fruit. But again, using a 5-minute breaker, which means for high probability objectives, what can I use? Well, I can use the standard deviations of my breaker range utilizing the bodies. And that will give me high probability trading objectives, high probability just objectives in general. And if we look at this, 1.5 standard deviation lines up beautifully with said level. So it adds confluence to my specific levels. I'm actually going to remove the drawings very quickly, the background I meant. So targeting 2 standard deviations here would be beautiful. And if you look, adding, I believe, 2 ticks or 3 ticks actually gives you 2R. So that is definitely interesting to me. Here, I'll actually look. That is 726, and that target is at 727. So adding one handle would give you the perfect 2R risk to reward for a low hanging fruit. If you had the lower entry, meaning at the inverted fair value gap, then 2R was not an issue at this high. But you don't need 2R necessarily for your low hanging fruit. This is only a partial. Then you can continue further. You can also use standard deviation of your 1-minute manipulation lag, which gave you an objective higher here alongside a 4 standard deviation that got hit late in the PM. But here's the thing. I would not hold this trade all the way through FOMC. And even if you tell me break even, okay, but you might get slipped. And yes, this is a far distance, 24 handles, but for news like FOMC, 24 handles is nothing. You could get slipped 24 points. I believe it was yesterday I was talking to someone who actually got slipped 28 points during news. So don't trade during news. If you have a runner for the morning, I prefer just taking it out early, all at this level, or even all at this level, than having to deal through all of this consolidation and possibly getting slipped out here and losing all the profits for the morning. But that to me is a clear objective. When you have a large gap, you can also use in your 1 minute, look at your quarters, but I prefer using higher time frame quarters because as you can see in this specific case, it did not even get respected because seeing as we closed above 0.75, you would want to see price head for consequent encroachment and respect the one level, but it did not. I've just found that 15-minute gaps and above when using quarters on large gaps are higher probability than using this. If you're unfamiliar with the quarters of a gap and that way of thinking, ICT talked about it in a video. If just tag me in general and I'll try and find that video if that kind of stuff interests you. But enough talk about this specific setup, right? It was pretty clear. We expanded higher with CPI, then consolidated all the way to FOMC. And as we know, FOMC has a 2-step delivery, right? That's how it delivers price. But more specifically, That is something I've noticed. I haven't seen a lot of people talking about this, but I've studied FOMC quite at length. And what I've noticed is you always get the first injection of liquidity at 2 that brings price on side. So what do I mean by on side is in the direction of your objective. So in the direction of the distribution before at 230 getting your manipulation and then getting a continuation. That's usually what we see, and not necessarily in a bearish scenario, but the 2 p.m. move usually runs on side. Moreover, with FOMC, you see a lot of consolidation raid. What is that? Well, very simple. You have a long period of time. ICT usually refers to session or sometimes even days where you consolidate. And when you have consolidation, what do you want to see? Well, I want to see a manipulation outside of consolidation. Just think of it as accumulation, manipulation, distribution. I want to see a sweep, or more specifically, raid one side of the consolidation to then be going and targeting the relative equal levels. So now that I don't have the recording, it's not the best, but some of you guys were in there when we were live, and what I was looking for is a move higher to then distribute lower. Was it the cleanest move? No. We did get it. Was there a high probability entry? No. As I told you guys during the live call, I was trading um, uh, currently an Apex challenge, and they are $25. There's a big promotion, so I didn't mind. I'm over leveraging, playing aggressive. I don't mind paying one more if it means having it quicker. But I did trade this move. I actually entered on the down close candles because I was expecting a lower move. I believe I entered somewhere at the bottom range of this one, just clicking on the button, not using any specific PD array because I did not expect it to retrace to this level. And I had a running trailing stop at the highs of the previous candle up until we broke this low. Then we traded into this. I added money here all the way to what I said was going to be a clear objective for later, where we had those relative equal lows that yes had SMT on ES. Why I'm not pointing out every SMT at the moment, and why I'm not pointing out what some of you might say is the cleanest move there. You'd see this breaker, you'd see this overlapping fair value gap, and you'd be like, well, whoa, Ollie, that's a clear unicorn. No, because you have to be honest with yourself, and we traded it live so we can tell. How many times would you have went long if all you were waiting here was SMT and breaker block? A few times. And you would have gotten, stopped out a few times. Up until this point, of course. But even if you waited for 230 and then you were looking for a Judo swing low because you were looking for longs, well, you would have gotten stopped out here because there was SMT at this level. We can see it from these. So we can see NASDAQ went higher here and ES went lower here. So there was SMT everywhere, even on the highs, and that's what happens in consolidation. And you have to wait for time and price to align before you can get everything. And price was not aligned because we needed a raid on these highs, or at highs of day. We needed a raid on this consolidation to then start truly distributing lower. And I'm not interested in trading manipulation. So I'm not going to point this out because there were a lot of losses along the way if you were looking for longs. And I was not looking for longs. I was looking for a move higher to then give me the distribution. I want to concentrate on expansion. I don't want to concentrate on trading manipulation. That expansion came after. Of course, there were no good entries there, in my opinion. There were some scalp entries along the way, just entering on nothing or entering on the retracement into this fair value gap. This is pretty much inducement of these equal lows. So there was an entry, just not the type of trade that I'd be willing to take on a funded account if it's just talking about me, right? You also had data highs, data lows, sorry, lower. When I say data, by the way, I think that came from ICT concept. It's just news highs and news low called data high and data low. So don't ask me why. I didn't choose that name. I don't know where it came from. I just heard Kit say it a few times, and now I'm just calling it data highs, data lows, trying to get the full name. And then, of course, post New York, we aggressively spool higher, but that's not something that interests me either. So basically, what I'm saying for today is you needed to know you could trade before FOMC for that first CPI expansion, and you did have a beautiful setup. And then the PM was a little hard to navigate. But if you remember what I was talking about, first you need a raid on consolidation. Why is this not a raid on consolidation? Because my objective was lower. So that is purely based on bias. I was looking for a bias. And also, when you look at time, you see that 2 p.m. created a move in the correct direction, right? On side with the markets. Then we saw consolidation, which can also be known as time distortion. Meaning what? Well, you needed time to align before. And what do we have right here? Well, 1515. That last power hour macro, 1515 to 1545, started with manipulation, and then we were ready to drop down. And as you can see, that drop down happened, and 45 we actually retraced and kept going down after hitting this order block in the premium of our latest expansion range. Talking about this swing high to this swing low, premium order block right here, tapped, went to break another low, and then retraced the day to a close. So you did have a way to understand what was going on. But was it easy? Not at all. Right? I would love to have the recording so I could just post it on YouTube and say, if you guys are confused, just head back over there and it will clear everything up. But I don't, right? My power cut off in the middle of it. It corrupted the recording. But no worries. We'll have plenty more tape reading tomorrow, right? We'll have plenty of opportunities. I'll still be on that combine. I believe now it's up $3,000. So I'm going to be trying to trade that, trying to pass that one in the next 2 days. Do we have any questions at all about what happened today? And well, actually, just you guys can type questions if you have any. But one thing I do want to point out is standard deviations. Whenever you're looking for a turning point in the market, always use standard deviations. They bring extreme confluence to your setups and to everything you do. For those, I like to use intraday. So I'd head to a 15-minute chart and I'd look at down moves. Or you can also use, I believe, where was it? The low of day. So midnight, this is low of day. And after CPI, you could anticipate low of day. And since it's a very volatile move, that's where I get these big numbers out. Maximum expansion I can expect is 11.5. But what I wanted was 10. Where's my 10? I don't have 10. Well, here. I'll call 10 right here. 10 standard deviations of your manipulation is how far you'd expect it. As you can see it did not reach all the way there, of course, but these levels, these standard deviations give you, how can I say it, just add confluence to your trade. And even if it's as far as 8, that has a very low probability of hitting if you're taking everything out of context. If you have an objective lining up with said standard deviation, then that standard deviation becomes high probability. I like to head to a 15-minute. I like to also look at a 5-minute here and there. And I believe I was looking at this, just our down move from the morning that formed SMT. I was looking at this on the 5-minute. As you can see, very clean reversal here up until the raid, followed by expansion lower. So pretty decent day. But the main opportunity that we had was definitely in the morning long. At least for my model, my opinion, that's what I saw. I don't know about you guys, but I didn't see a lot of pictures about CPI and FOMC about people winning today. It was pretty quiet when CPI is usually the time you see a lot of gamblers coming out. They just entered before news. Try to gamble their funded accounts. Unfortunate. I didn't see any of you guys type in chat, so I'm guessing it was pretty clear. Hoping it was pretty clear. Yeah, fair enough, bottom frag. With movement like this, at least to me, there was nothing other than this morning. This is what I traded on my fundeds that long. I'm pretty sure I posted the executions in general. If they're not there, I'll go ahead and drop them in analysis or in executions, actually. And after that, to me, FOMC was just a hard one to read. You did have a slight opportunity, but nothing very, very clean for sure. So taking the day off today is the best thing you could have done. Red day, Victor. That happens, brother. Journal it. Ask yourself why. Ask yourself how you can come up with solutions so that that doesn't happen again. That's the main thing, right? Why did I lose money today? And sometimes the answer to that will just be, well, I executed perfectly. I did everything I was supposed to do, but I still lost. Well, fuck yeah. Is any model in the market's 100% win rate? No. Sometimes I see a perfect setup. I did everything right, executed perfectly, aligned with time, everything was present, A+, and it still loses. It's not because it's high probability that it will work. It's just it has a higher chance of working than anything else. So you just got to be confident in your edge, trust your edge, and just keep repeating, brother. And I know as traders, we hear this all again and again and again. Oh, just have confidence in yourself. It's okay to lose and keep going. Don't worry. Just don't give up. Okay. I even tire myself from saying it so much because sometimes it just gets over your head and you're just like, I fucking know. Shut up. I'm respecting my rules, but I'm still pissed because I lost money today. It seems stupid, but honestly, touch grass, bros. Go outside, just take a breath of fresh air and come back inside, and all of a sudden you'll see that it's not so big of a problem. Just, it sounds very stupid, but that's a big thing that was for me. I was tilting, I go outside, take a breather, come back in. No matter if I lost an opportunity during that time, I'm still okay, because I knew that if I stayed inside, I would have tilted and blown another account here and there, and I wasn't to the blowing account for a while. So I get it. I work while I trade, changing to second shift. Damn, that's dedication right there. Working while you trade. That is definitely something. Good stuff though. Good stuff. That takes a lot of commitment. I respect that. I'm not seeing any other questions, guys. So I am taking it as an all clear. Anyways, the recording will be available on YouTube later tonight. So on that note, I hope I see you guys tomorrow for the live trading event, and I wish you all a great night. Have a good one, guys.